All right, hey everybody, just want to do a quick sound check here and make sure we are cooking with gas. Excellent, excellent. I'll show you guys here in the trading room too. Just I know a couple people were asking about it, so I figured this would be pretty easy. And so what we're going to do is just kind of a pretty laid back, just kind of an extra teaching on one of the tools that had come up in the recent open house. So when we're talking about the 10x bars, all right? So for those of you that have it, that's great. It's just kind of a review. If you don't have it, it's just understanding the concept of it, especially in a market like this, because it's very, very useful in just terms of basic kind of timing and understanding the market. And what happens too, especially in a market like this, is that it can get very stressful in terms of what's going on if you're doing it emotionally or based on gut feel. But if you've got something that's kind of basically telling you exactly what to do based on price, it becomes much more unemotional and you just go with the flow. Okay, so that's what this is. And again, just want to tell you about it. So if you guys already have the 10x bars, great. It's just a review of what they are if you've kind of forgotten about them. And if you don't have them, it's kind of explaining what they are, and as a member, how you can get those. So, all right, let me look at this real quick here. And awesome, okay, fantastic. So let's just kind of dive right in. And I think I got my drawing tool going. Yeah, perfect. Okay, so during the open house, and the open house was when we kind of opened up our live trading room to everybody, I did receive a lot of questions on price action. And basically at the end of the day, what is the best single tool for trading pure price action? Okay, and the thing about price action, it's deceptive, okay, because it always looks obvious after the fact. And what I'm talking about here is not something that looks obvious after the fact. It's something that can give you confidence while you're in it at the moment. You know, if you're short, do you hang on? Do you get out here? Is this thing about to reverse? And the more confidence that you have in what's going on based on very specific criteria, the more comfortable it's going to be for you to go with the flow, all right? The other benefit of this is, instead of, a lot of times we get into a trade, you know, here we are at $100, and we project out and say, okay, we think it's going to get to $110, right? Now, it may get to $105 and then show very clear reasons that the move is over, but because we originally got in with a target of 110, we don't adapt accordingly. All right, and so it's important to have a tool in place that says, hey, I know your target was 110, but guess what? 105 is all you're going to get. Or even better, I know your target was 110, but you know what? Don't get out here because this damn thing is going to 120. All right, so that's kind of the idea with this. So from there, we'll just dive right in. So the idea with this is that there's a lot of different tools out there, okay, and you know, some tools are too laggy, some don't have enough information, some are just right. So that's the best I could do with that graphic. The main thing in trading, of course, is the idea of being committed to succeeding, okay? And in terms of a commitment to success in trading, the one also thing it's very important to understand is that a lot of times this is what people think it looks like. I read a book, I get a platform, you know, I'm good to go. Of course, if you've been trading for any length of time, you know that the market can throw you curveballs, and success really looks like this. And so the idea here, and of course there's always going to be gaps that can kind of throw you for a loop, but you should have a reasonable degree of certainty when a move is beginning, going to last, or about to stop, based purely on the price action, okay? And regular single candlesticks can help, but it's not the best way to do it. It doesn't give you a complete picture. It doesn't give you all of the information that you need, okay? So let's talk about conviction. And really what this comes down to is that, is the market you're trading, on the time frame that you're trading, is it showing conviction or not, okay? The description of, from a definition perspective of conviction, is a fixed or firm belief. No clever argument, no persuasive fact or theory could make a dent in his conviction in the rightness of his position. okay? Of course, in trading, that is a very, very dangerous mindset to have. So you want to have tools in place that tell you it's okay to have that conviction, or guess what? You need to drop that conviction like a bad habit right now. So a belief is something you will argue about. A conviction is something you will die for, okay? And I use the term conviction because I like to talk about, do the markets here have any conviction or not? And I typically define that as a move of greater than a 1% net change. But along the same times, you want to have tools in place to let you know, is there conviction underway right now? Is it unfolding into a bigger move, right? So the best trades are the ones where too many people are convinced that something is going to happen and then it doesn't. Their mad scramble to get out of their positions is what can cause some of the biggest and most consistent moves. In other words, and this is the truth of trading, there's a lot of money to be made in situations where the crowd is wrong, okay? But most times you can't tell that the crowd is wrong until well after the fact. The idea of this tool is to give you a sense that the crowd is wrong as soon as possible within the context of the move being at, less than 15% underway. Okay? Yeah, total silly string. So welcome to the 10x bars. All right, we want to avoid at all costs trying to impose our convictions on the market. Okay? There are a few guarantees in life, but the one guarantee here is that this will not end well. Yeah, it may work fine on the next trade, but over the course of a trading career, your career will end. This is the trap of wanting to be right instead of wanting to make money. Because when we follow our convictions in the market, we automatically filter out all evidence to the contrary. Okay, this is also known as confirmation bias. If you've got an idea and it's like the mind or the ears only hear and the eyes only see what the mind is looking for. So if you're convinced that a move is going to happen, you're going to ignore all signs to the contrary unless you've got a tool that you A, completely understand, and B, is staring you in the face so that there is no potential argument to be made, okay? And then that way you submit yourself. Instead of forcing your conviction on the market, you simply submit yourself to the will of the market, like a surfer submitting themselves to the waves, and go with the flow, all right? At the end of the day, I am much more interested in making money than being right. Nobody is given awards for being right. No mortgages are paid for being right. Mortgages are being paid by making money. So instead of trying to impose our own beliefs onto the markets of what we think they should be doing based on our latest research or the latest news report we listen to, why not just let the markets tell us when it has conviction one way or the other? If it has conviction to the upside, does there need to be a reason? Do we need to understand why? Okay, and I think this is the biggest thing I found, especially with traders who are newer, is the question is, well, why is it going higher? Why is it going lower? What's the news? Who cares? Because it doesn't matter. If there's conviction to the upside, the proof of that is in a specific type of indicator that we look at, accompanied by volume or lack thereof. Okay, it doesn't need to be a reason why. The reason could be somebody just is panicking and getting out of a position. Okay, that's not to be on the news. And by the way, most of the moves that happen are not news related. Okay, they're somebody's on the wrong side of the trade related, and that's not something that's reported in the news. So if you've ever looked at something and you don't understand why it's moving, and it could be as simple as a fund having to close down because people are wanting redemptions or they're retiring. It's like, well, we gotta sell these million shares here. All right, you're not going to know that, and so that's why you don't question what's happening to price. So hint also, the market's pricing today what is expected 6 months out. So today's news is largely irrelevant against this macroeconomic picture. All right, if it has conviction to the downside, are our arguments to the contrary going to make any difference? No. When the market started selling off in October, initially a lot of the talking heads on CNBC were screaming that this was a buying opportunity, PE ratios, blah, 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 blah. But what the market was pricing in was Powell's aggressive interest rate hikes, which they were forecasting that would hurt the markets. They only changed when Powell changed his tune. So if we were listening to the news, things could be happening a little, too little too late. However, if we were just looking at the 10x bars, all we had to do is follow the money, all right? So the idea is when you're dancing with the markets, okay, it is best to let the markets lead. So this tool looks for conviction across two modalities. First, momentum or lack thereof, and then two, conviction or lack thereof. So first, let's look at the momentum component of the 10x bars. So in a nutshell, how to read the 10x bars. Green bars equal momentum is accelerating higher, okay? Red bars equals momentum is accelerating lower, and yellow bars just means that there is no price momentum higher or lower, okay? This is Chopville. If you're long options with yellow bars, you're screwed for the most part unless there's a big squeeze or something setting up, okay? So what is driving this? Are the guts of the indicator. All right, let's take a look. So green bars, and again, this is the time frame is irrelevant because if you're looking at a 30-minute chart, you're looking at conviction level from the perspective of a 30-minute chart. All right, that may be different than what's happening on the daily chart. All right, so what's nice about this is that it is total time frame dependent. If you're trading the 30-minute chart, great, just trade the 30-minute chart. You actually don't need to know really what's going on everywhere else. So the idea here is that the green bars here just indicate that momentum is accelerating higher. This indicates higher than normal buying demand, okay? Higher than normal buyer demand. If you guys are familiar with options, there is expected move and greater than expected move, okay? If you just see green here, just think of it in terms of like, okay, we're marching up to the expected move of the option price, okay? If it's yellow, on the other hand, yellow just means that there is momentum higher or lower. Buying and no one is really selling. This type of price action can be frustrating to trade for those who are unaware. For directional trades, it's best to stay away. For premium sellers, this is a great time to sell iron condors. Think of this as a market that's simply being pinged back and forth within the expected move, okay? And then, of course, red bars equal momentum is accelerating lower. This indicates higher than normal selling pressure, all right? And think expected move, but in this case, to the downside. All right, so, and that's good, and that's kind of pretty basic stuff, and just kind of looking at it that way. All right, so how does this all work? So there's a couple of components to this. And again, the guts of this aren't a secret. It's just kind of how they're compiled and then how we use them. So first it is Jim, good question. We're getting right into that. So the first component of this is the ADX, which is the average directional movement index. Now I know for some of you, this is all stuff old hat before, that you know what these are. Some of you may not know what these are, and that's fine. So I'm just going to kind of go through it step by step so you'll fully understand the methodology behind the madness, so to speak. So the ADX, which is the average directional movement index, this is known as the trend strength indicator. Trading in the direction of a strong trend reduces risk of a reversal against you and increases the potential profit of a trade, as a strong trending market tends to keep trending as people pile into the trade. Okay, this is really key to know, that the longer a market trends up, the more people start to pile into it. So at the same time, while you want to ride that train as long as you can, you also want to know when that momentum is running out. Because when that momentum runs out, that's when all the people that piled on here, what'll happen is you get to do boom, 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 people are piling on, and it starts to trade sideways. Now, if the momentum stays green, that's fine, but if it starts to turn yellow, that means it's petering out. All these people here are still delusional, though. The ones who bought late, they're not selling, Okay, so there's going to be some small profit taking here, but you want to get out before the avalanche starts. So what's nice about this is you kind of see the avalanches before they start. All right. So so the ADX is used to measure the trend and tell us when it is officially trending strongly. Okay, it is truly the ultimate trend indicator. So here's the ADX added to this chart. So the ADX, or average directional movement index, is below. So when the market is trending higher, the value is high. However, so you can see right here, the market is trending higher, the value is high, but it is also high when the market is trending lower. So the ADX by itself does not care about direction. It is only looking at, is this market strongly trending one way or the other? Okay, so in this case, you can see that when we're choppy here, the ADX is very low and non-directional. Does this only work with the pre-market turned off? No, you can actually use this 24 hours if you want. The pre-market, post-market stock trading is a little goofy, but it's not. You can actually watch it. This is one of those indicators that you can watch it through all of that. Sharon, we'll look at that on the ES, okay? For sure. What is the difference between the 10x bars versus the early in and out indicator? So the early in and out indicator, here, and this is what the early in and out indicator looks like. This is basically something that's telling you when a squeeze is about to fire. Okay, so I'll see if I can find an example here. Green, green, green. Yeah, so if you see something like this where there's a squeeze and then you get green bars in the squeeze, that's telling you that the squeeze is about to fire. So, sometimes the squeeze will just keep going and going and going. That'll at least tell you that, hey, this is about to fire, so you can get in. I like it too when you're looking at these like monthly type situations. Like here's a NASDAQ monthly chart, and you're like, oh, okay, here's a squeeze. The squeeze happened for a year, but you can see right here that it was telling you that it's getting ready to fire. So that's where you could kind of load the boat up long. So that's what's nice about that. All right, so now I just gotta find my presentation again. There we go. So basically, the higher the ADX value, and we will towards the end of this, we're gonna look at some current charts and things like that too. The higher the ADX value, the stronger the trend, and then the lower the ADX value, the weaker the trend. Okay, so again, doesn't matter which direction, it's just weak trend, strong trend. So the question here is, what level in the ADX constitutes a strong trend? So I like to use 20. Basically, above 20 is a strong trend, below 20 is a weak trend, all right? So now we can kind of look at this again and say, okay, great. We can see that right here, this green line is at 20. So basically, if the ADX here is under 20, which is in red, that means that these bars are going to be yellow to represent a trendless market, okay? But now the question is like, okay, well, here it's above 0 in green, and here it's above 0 in red. What does that mean? So easy enough, right? ADX above 20 is a strong trend, and the ADX below 20 is a weak trend. So if you see yellow bars, it basically means that the ADX is below 20, which indicates it is a weak trend. Okay, if it's a weak trend, don't try buying calls and puts, because you're gonna die. You're gonna have a slow, painful death by premium decay. You only want to be long calls or long puts if the bars are green or red. Okay. So now the question is what constitutes a strong up versus downtrend, since the ADX in both instances is above 20. So for the ADX, I just use the default. Yeah, on not a lot of that stuff, just the default's fine. Okay, so where this comes in now is what's known as the DMI plus and the DMI minus. All right, so DMI just stands for directional movement index, and of course plus means upside movement, and minus would mean downside movement. Okay, so upward buying pressure equals green, downward selling pressure equals red. All right, so this is kind of it's a good quote to live by. Whoever is on top is in control. So control changes on a cross of the red and green lines, with red representing the DMI minus and green representing the DMI plus. Okay? So if we look at that, all of a sudden it's like, okay, so now we can kind of look at this and say, great, here we can see that buying pressure is stronger because DMI plus is above minus, all right? Hence the green bars. Over here, the selling pressure is stronger because DMI minus is greater than DMI plus, okay? However, keep in mind, right here the ADX is under 20, so we're going to have yellow bars. Here, the ADX is over 20, so we get the red bars. Does that make sense? So if the ADX is under 20, that overwrites DMI plus or minus. That just means we're in chop hell. Then it goes over 20, it looks and says, okay, if red's on top, we got momentum to the downside. If green's on top, we got momentum to the upside. So now what we want to do is we want to combine all three of these, okay? So, so what am I interested in here? I'm interested in times when buying pressure is above selling pressure and the ADX is above 20. I'm also interested in times when selling pressure is above buying pressure and the ADX is above 20. If one of these conditions is not met, then I know this is a market I want to avoid in terms of taking a directional trade. And that's really the key with this, especially with options. As you guys know, if you buy a call or you buy a put, it's like buying a brand new car and you drive it off the lot. And the moment you drive it off the lot, it begins to lose money due to depreciation. And that's what happens when you buy a call or buy a put. The moment you buy it, it starts losing money due to theta decay. So if you buy an option with a low ADX, you're toast, okay? But that's, so a big part of this is time. It works great for futures as well as individual stocks. So now I can combine all these together and we can kind of see the first half of this, because remember, there's one more piece of this, and say, great. So now we got a situation, okay, where we have the DMI plus, which is green, above DMI minus, which is red, and the ADX is above 20. So I'm going to draw a line here. Okay, so if those conditions are met, green is above red and ADX is above 20, we got green bars, okay? Here, you can see red's above green, green's above red. It doesn't matter because the ADX is below 20. That means this is chop hell, okay? Chop hell. You want to stay out of it. You can sell premium, but don't do direct trades in that unless you like banging your head against your desk repeatedly. And then over here, for down moves, I want to see you get DMI minus above, DMI plus, and ADX is above 20, all right? So that's kind of how the math works for that. Yeah, exactly, B. Excellent iron condors when the ADX is less than 20. Can you have low ADX and high IV? You can sometimes, Lewis. There are situations where, you know, there might be a pending event like earnings and the market's just not moving very much. So you can have those situations for sure. All right, so that's the last squiggly lines, right? And although this is something that I've always looked at, there are many times when I have ignored it, frankly, because it's not easy to watch. You know, you can only, the human brain can only process so much information at a time. And so I'd find myself missing things because I just wasn't paying attention to all the squiggly lines. So I had Eric create the bars based on those specifications. So now I can sit there and say, awesome. I can strip all that away and I can look at it. You know, this is something I can teach my 8-year-old. Hey, if the bars are green, it means that momentum's to the upside, and stay long until it changes colors. Okay, now it's getting kind of choppy, right? If it turns red or yellow, you want to get out of your longs because that's an indication that the momentum is coming to an end. It's a non-emotional judgment call. If it's yellow, just stay out, okay? Unless you're an experienced options trader, that's a great time to sell iron condors, okay? And you can take it off once the momentum picks up again, it's green or red, okay? So easy peasy. So a tip here is that, okay, and it's little things like this that can make or break your week and make or break your month in terms of profitability. If you're playing a stock and it breaks out to new highs with yellow bars, that breakout will generally fail, okay? Because it means there's no gas in the engine. You know, if this was the recent high and it pops up and you're all excited, but the bars are yellow, you're looking for it to fail, okay? Why? Because there's no price momentum in the move. Price momentum is a reflection of buying intensity. If there's not price momentum, it means there's not buying intensity. So a lot of times people ask, like, what's, why is it going up or going down? And the joke is there's more buyers than sellers. Well, the truth is there's never more, because every transaction has a seller. It's just that the conviction of one group is higher than the other. If a market's going higher, the conviction of the buyers is such that they'll often just buy it at the market. That's what creates the momentum, and same to the downside. So all you got to do with something like this is just wait for the market to prove that it's ready to go instead of hoping that it is ready to go. So old way versus new way. So on the left, that's kind of the old way, how I used to look at price. I'm like, okay, I've got my candles. Here's this, and oh my gosh, now we're choppy. And now I'm just like, oh, boom, boom, boom. It's just a lot easier to see and process and understand what is going on. Yeah, no, Tampa Tony, it's shorting breakout failures. It's, yeah, awesome. So now, one thing to understand here is that even though I love this the way it is, you got to understand that is not all. Okay, there's actually a more important component of this. And while I found that identifying momentum was very helpful in my trades, I noticed that sometimes there were moves that were much bigger than normal. Okay, and that's really, if you could sum up my trading in one sentence, it's I look for opportunities where the moves are going to be bigger than normal, where there's going to be greater than expected moves, okay? And this always occurs when the volume was about 50% above its 20-bar average volume, okay? Again, this always occurred when volume was about 50% above its 20-bar average volume. This is what is known as conviction, okay? So when I added that to the chart, it looked like can you have red bars when it's going up? Not for very long. Usually, because remember, if it starts losing momentum, they'll just turn yellow. But we'll look at some recent examples here too. So here's the same chart for continuity's purposes of the Q. So I used to, again, I'd look at the candlesticks. I got the DMI plus, DMI minus. Here's the ADX. Here's the volume. It's like, oh boy, look at that. There's a volume spike. Okay, if I see that volume spike, I'm pretty sure that we're going to keep on going. All right. If I see that volume spike, I'm pretty sure we're going to keep on going. If I see the volume spike, I'm pretty sure we're going to keep on going, right? If I see the volume spike, I'm pretty sure we're going to keep on going. And again, it's just a lot to look at. So when I told Eric about this, he thought about it and said, well, I could just put a dot on the bar whenever the volume is 30 to 50% above its 20-period moving average. You could choose if you want 30% or 50%. And I was like, my response to that was, if you could do that, that will be amazing, and I will save my firstborn son for your daughter, for the daughter of your choice. Eric has a lot of daughters, so I think that would work for everybody. So then what I did is put together this again. Now the first thing I noticed is that I would look at the candlesticks and just say, well, I see some dots here. And remember, these dots indicate that on that bar, the volume was 30% higher than normal, okay? And that can happen too on yellow bars, but not often. But with candles, I found that it was kind of difficult to see. Kind of difficult to see. So then I changed it to 10x bars. So that's why it's 10x bars and not 10x candlesticks. So now when I change it to bars, it's like, oh, great, look, we're coming along here, and look at the dot, okay, volume, green. That means there's some juice in the tank here. You buy that first pullback, oh, we go, more juice in the tank. And then when you start to see this, it's just a sign, and usually when you start to ease out of a trend, it goes from green to yellow. Sometimes it'll go red. But typically at this point, there's really no reason to be long at this point, okay? If you got in on a trade on a 30-minute chart to the long side and you kind of see that first red bar or yellow bar, there's really just no reason to be in anymore. A lot of times people will keep holding on in the hope that it's going to keep going higher. This is telling you, get out, okay? And it's telling it to you loud and clear. And a lot of times I'll wait for a bar or two. The main thing to keep in mind is that when the trend is going, it's clean, okay? It's just going to stay green. The moment it starts to falter, okay, yeah, if you had held on, you could have gotten out right there. But you know, we all know that that game's a joke. You just want to, if you can catch 80% of the move, you're golden. If you catch 70% of the move, you're golden there too. And then from a directional perspective, you just stay out of this, okay? Now, sometimes you might see something like this and say, oh, we're rotating to green, and that can be tricky. Like this, I know, was like before a big economic report or something like that. So obviously you want to be aware of earnings and economic reports and things like that too. So at the end of the day, all you need to know is this. Green bars equals, because you're going to have either colors or colors with dots, okay? It sounds like a kid game, but if you've got green bars with no dots, you're looking for a normal expected up move, okay? However, if you get green bars with dots, it just means that there's big potential for a greater than expected up move because you have momentum plus conviction, all right? Momentum by itself is fine, but you've got to have the conviction in the form of greater than average volume to prove that there's real buyers in that market, okay? Conversely, red bars by themselves, you're looking for a normal expected down move based on the momentum. But if you've got red bars with dots, you have the big potential for a greater than expected down move because you've got momentum plus conviction, okay? John, what would be the driver to choose between 30% and the 50% range that you mentioned to Eric? So I've played around with both of them, and what I've come to do is I actually end up putting both on there. So like the 30% I'll use as a circle, and then like the 50% like an arrow. If I could just choose, I mean, it's not a huge factor one or the other, but I kind of just like to know, is this 30% greater than average volume, you know, or is it 50, or is it 100%? Like you could set different thresholds like that. So the main thing though is just, you know, you want greater than expected volume. The nice thing about 50% is you're going to have fewer dots, so when you see them, they're going to mean something. It's kind of how that works. Can this be used with any time frame? Absolutely, J-Town. We're going to look at some current examples on multiple time frames. Do you ignore yellow bars with dots? I do, Dave. I do. So to me, if it's yellow, it's dead to me from a directional perspective. However, we'll talk about how to use this like with squeezes as well. So yellow bars basically mean no momentum either way. So it's convictionless, okay? And I like yellow because yellow, you know, there's like in the old Western movies, somebody who was yellow had no conviction, had no courage. And that's how I look at yellow bars. Here's a stock, or the participants in the stock, they're cowards at this point. They're not willing to buy more, but they're not selling it. They're just hurry up and wait mode, okay? So you're just kind of looking for, you know, bouncing back and forth between support and resistance. And believe it or not, it's actually, yellow bars are actually good for a lot of different strategies, just not, you know, if you own a long call or a long put and the bars turn yellow, that's the wrong environment for that, okay? You want to be doing spreads or iron condors and things like that too. So if you're a pure directional trader and you just buy calls and buy puts, yellow means get out, okay? Wait for momentum. Yellow bars with dots, still no momentum either way, but momentum may be about to start. So a lot of times if I see yellow bars with dots, I might keep an eye on it and say, well, let's see if this is, you know, if you get yellow bars with dots and it's going higher, that might be about to turn green, et cetera, et cetera. So if we go back and look at this, we can kind of talk through this. So here is kind of the checklist. So how to use this. So point number one, which is right here, you can see here we had red dots, we had red bars, right? So we had just finished kind of a sloppy little downtrend, red bars, and you're looking at this going like, well, okay, I want to get long. Well, I'm not going to buy red. That's like called buying a falling knife. So then, boom, you kind of get a gap up here, you get some green bars, great. Buy it, and with a stop here at the lows. Okay, remember, that's a 30-minute chart, so you're risking 1 point. You know, not a big risk here. And your target is open because you don't know what's going to happen, right? That's the beauty of this. You're not sitting there going like, okay, it's got to go right here. No, you're just gonna risk. In this case, you know, you're risking 1 to make 8. But the secret is you don't know going in. All you know is you're risking 1. Okay, that's fine. if you know, because this teaches you, this forces you to just focus on your risk. If you're willing to risk one, then let's see what's going to happen. Okay, that's kind of the right, and that automatically forces the right attitude as well. Let's see what happened next. So at point number 2, you get a green dot. That's huge. That's telling you that there's strength in this move. Maybe that's short covering, but it's got staying power. Okay, great. Let's stay overnight. The next morning we gap up. There's another dot. That's great. We've got staying power. Okay, and you can see there's not a lot of dots, right? It's just the dots represent higher than average volume. We get another one. We get another one. There's no reason to sell. Okay, you know, sure, you can trail up a stop. Don't trail it too close. You know, just use the prior day as low. And we're trading sideways. There's still volume coming in. That's great. Boom, break out again. And then boom, we break out again. Now right here, this is always weird. It's like if you're, you know, if you go to lunch and come back and it's like, well, there was 2 red bars and it didn't hit my stop and now it's green again. Okay, that's fine. And I'm the first one to say, look, the markets are the markets. This is just telling you that maybe something's going to change here. If I see something like that, I'll just trail up my stop and say, okay, I'm just going to put my stop right there. We're coming along. We're coming along. Now we're yellow. Okay, we're like 4 or 5 bars into yellow. And you can see had I kept a stop here, I'd be in. But typically at this point, I'm out. Because remember, if you're long calls, what's happening here? You are losing premium, okay? And there's no reason to be in here. Now, if you had bought long calls here and you sold some put credit spreads up here, that's fine. Chop is fine. But that's death for long calls, okay? And even if this would have eventually kept on going, this would have been, you know, look at this. That's like almost a week and a half of sideways. That's going to kill your long calls. And if you've got out of the money calls, you're dead, right? So that's why I really, really like that. So for me, yellow from a directional perspective is simply the no-go zone. In this case, I would avoid directional trades, meaning I would not buy or short the stock, nor would I buy calls or puts. For more advanced options trades, this is a great time to sell spreads and iron condors as they make money as the option price loses value, okay? And then same thing over here. Okay, so we break down at point number 1, great. If you see some red bars, we took out the lows, you can short, stop at the swing highs, okay? Now, when you see the dot, that's a good thing. Let's hold on. There's some conviction here. Boom, dot, great, let's hold on, let's hold on. Is the momentum changing? No, just stay short, stay short, stay short. Got another dot, great. Now it's coming up a little bit. Do we freak out? Nope. Remember, our stop is at the prior day's high in this case. So it's fine, you know, there's going to be some retracements, but there's no need to get your knickers in a twist at this point because the bars are tailing you. And then boom, we continue going down. All right, so what's nice about this is that it forces you or it teaches you to submit your will to that of the market, okay? This way you're dancing with the market instead of trying to impose your will on the market. And when you start watching this stuff, then it becomes ridiculous. Anytime you try to impose your will on the market, like, I think this is going to happen, you realize how insane that is, okay? It's pure insanity because it has nothing to do with what the market's going to do. It's also another good reason why watching the news makes no sense, because the bars tell you everything you need to know. So basically what I love about this is that the conditions for being in the trade are either true or no longer true. There is zero room for interpretation. There's zero room for your emotions to come in and screw this up, okay? If you are long, momentum bars are green. That's it. The conditions are either true or not true, and if they're no longer true, get out of the trade. So on this kind of a trade, you don't have a target, you just manage your risk, okay? You start off with your stop loss, and you just trail your stop. So on the previous slide, we bought the QQQ with green momentum. The bonus is that we also started to get conviction, the dots. When we can stay in this trade as long as that condition stays true, okay? So if the bars turn yellow or red, the condition for being long is no longer valid, the reason we got in is no longer true, so we simply exit. We do not debate the absurdity of the universe. We don't reflect on whether or not our childhood was a good one or not, or whether our mom beat us too hard in terms of that coming up. You know, any garbage that comes up when we exit a trade is like, oh gosh, I'm not good, whatever. That's all thrown aside because you just become like an automation. Green bar, great, I'm long. Oh, no longer green, I'm going to get out. Much more relaxed, okay? Much, much more relaxed. So here's some recent charts, okay? I'm going to show you multiple time frames, all right? So Arthur, just depends on the time frame, okay? So here is Amazon going up right now. You remember when I talked about yellow, I was like, I'm not a huge fan of yellow. However, if I see yellow and a squeeze, okay, great. In this case, the trend is higher. I'll buy some calls with the idea that the squeeze fires long and we get some green dots, okay, and it turns green. That's amazing, all right? And ultimately, this worked out pretty well, although we did have kind of a big puke there. Another squeeze here, the momentum's already green. Great, let's just get in and ride this sucker, okay? Another squeeze here, it's yellow, but the idea here is going to turn green, it does, and we explode higher, right? However, you're looking at this more recently, and then, okay, this was a squeeze in October, it fired short. This is the first big volume we got on a daily chart. Now, if you're looking to buy this dip, at the very least, you want to wait to see some yellow, like 2 yellow bars in a row. But through this whole time, it's red, 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 red. Even on this rally, red, 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 right? Now, we did get this one green bar here, and that does happen. You know, typically on something like that, I do like to see a little bit more oomph, and I think, you know, for all this too, if you follow Carolyn's and all that stuff too, but reason to get long this, okay? Now, you might see like right here, it's like, well, gosh, on a daily chart, this didn't catch this move at all. That's why I also use the 30-minute charts, okay? 30-minute charts catch these kind of moves. The daily charts is doing, okay? Here's I love the 78-minute chart. So this is 70. All right, so let's say, you know, you're looking for it, you want to buy it, maybe there's some squeezes setting up. Here we are, we got some, you know, red, 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 we turn green. Okay, great. You see this green? You want to take a stab at it? Great. You buy it, place a stop. As long as it's staying green, hold on. Oh my gosh, we got some volume. That's great. Oh my God, we got some volume. That's great. Staying green, staying green, staying green. We got some volume, right? And then boom, if you get red. So from a mechanical system perspective, you get here at 260 bucks. There's no reason to get out, 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 and then get out at 340 bucks. Now, I don't know about you, but that's a pretty decent, you know, that's the kind of stuff that can happen if you just submit your will to that of the market and don't fight it. This is a daily chart, okay? Oh my God, it's a great company. I want to buy it. No, you don't. Okay, here at $210, you got red bars with momentum. This chart was taken at today's close, and it still hasn't changed. So if you're short Apple, there's no reason to get out yet, okay? The momentum is still to the downside, still to the downside. CGC, my favorite setup like this, when you've got something where we're just kind of moving along, we're moving along, you can see here we get a squeeze, great, it turns green, doesn't really do much, doesn't really fall, you know, kind of peters out. We get another squeeze, great, let's take it, boom. The stock goes from 28 to 45 almost straight up. Momentum, 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 momentum. All right, so I love like these 39 and 78-minute charts. They're really good for catching the nuances in these moves. All right, someone else is asking, what about futures? This is a 10-minute chart of the NASDAQ futures from today, okay? So this morning we were kind of trading sideways, 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 and a little down. 9 o'clock, boom, we get some volume, we start to break down. So, you know, a lot of times people are scared to short the lows. Well, if there's red momentum bars like this, you short the lows, and then great, you can stay short until you get some yellow bars. So it just kind of kept you short pretty much all day. And so that's the kind of stuff there where, again, you're not fighting the trend. So the idea with this is momentum, okay? Momentum versus conviction, all right? Momentum versus conviction. So with momentum, and by the way, when I say expected moves, I mean essentially what are priced into the options. So if you guys are familiar with that, what happens in that situation is, so if we look at the spiders, right? we come over here and we look at the spiders, and then we can see that the market makers for the February monthly options have priced in a move plus or minus $11.55 either way. And basically that's just taking, all that is just you add up the at the money straddle price, give or take. I mean, it's a little, that'll get you in the ballpark. Add up the at the money call, add up the at the money put, and that'll get you in the ballpark of that number. So what this is telling you is that, okay, so right now we close today at 262. So let's just round it up to 263. What this is telling you is that market makers have priced rounded up to 12, a $12 move to the upside or a $12 move, move to the upside or a $12 move to the downside over the next 24 days. Okay, so to the downside, that would take us to 251, and to the upside, that would take us to 275, right? So if we start going down and the bars are red with no dots, then the most I would expect is a $12 move to the downside expected, and that's priced in. Or if you get red with dots, that's when you can get a greater than expected move, because suddenly you've got conviction in the market. So that's where all of that gets fun. And that's what I mean by just holding on for the ride. So with momentum by itself, I look for expected moves. With momentum plus conviction, you have a very high probability of a greater than expected move, of course, especially when that's combined with a squeeze. So in that previous example of the weed stock, CGC on the 78-minute chart, it is worth holding on to the call option longer than normal, because with the squeeze, green momentum and dots, it is setting up for a solid greater than expected move. So the gold standard here is that we get the momentum plus conviction, that equals awesome, okay? And remember, we don't know if it's going to happen, but we can look and say it is happening. Because it is happening, we will stay in the trade, okay? In addition, with momentum but no conviction, look for basic support and resistance levels to hold, whether prior and key Fibonacci's, okay? So for Fibonacci's, that's a confusing slide, so we'll just go look at this. So take a look at this. This is very important. So oftentimes, if there's a squeeze down here, and here's a high, and here's the low, and we're looking for where this is going to go, okay? If you get a situation where it's just kind of like yellow bars and not a lot of conviction, we finally get some conviction here toward the end. But basically, you're expecting that 1-2-7-2 extension, okay? Again, just keep in mind here, there's not a lot of momentum until the last minute, and there's a little bit of conviction, but not much. Compare this with this move in AAOI, okay? In AAOI, not only do you get momentum early on, but you get conviction. We blow through the 1-2-7-2 extension. We blow through the 1-6-1-8 extension, okay? So the lesson learned here is that these targets are simply points with which to study the market, okay? If you've got green bars and momentum, hold on, just trail a stop, because if the momentum is truly going, you basically can just do a 2-bar trailing stop, meaning that, if you're here, go back 2 bars, 1, 2, that's your stop. Go to the next day. Did it take it out? No. So back 1, 2, there's your new stop. Now you go here, 1, 2, there's your new stop. Now you go here, 1, 2, there's your new stop. Now you're here, 1, 2, there's your new stop, right? And you just keep doing that until you get stopped out. That way you don't have a preconceived notion that you have to get out here, get out here, get out here. And it's okay to take a few people here, a few chips off the table. Let some run, because you don't know where it's going to end up. Okay, and of course, the great thing about this is that it works to the downside too. Remember, it doesn't matter if it is an up move or a down move. The principles are exactly the same, okay? So in this case right here, here is a down move on the Qs, okay? You'll notice here that we got momentum but no conviction. We basically stop right at the 1-2-7-2 extension to the downside. And we even come back to the 1-6-1-8, but there's no greater than expected move. Conversely, this is the daily chart of CMG, and you can see here that we get conviction plus, there's conviction there plus momentum, And in this case, as long as there's, you know, momentum, 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 and then you'll see as we break down, we get conviction, we blow through the 1272, we blow through the 1618. Okay, that's what I mean by just submitting yourself to the will of the market. So the idea with this then, oh, the difference between the 10x bars and the TTM trend. So it's different math. Okay, so TTM trend basically takes a look back to the prior 6 bars, okay, and then you just take like the high plus low plus close and divide by 6, and if the average price is above 50% of the prior 6 bars range, it'll stay green. If it's below 50%, it'll be red. Okay, so it does not take into account ADX, it does not take into account DMI plus, it does not take into account DMI minus, and it doesn't take into account volume. So the TTM trend is great. I like it. It's just totally different math. Totally different math. So all this knowledge is great for entering a new position. I mean, personally, I think entries are a dime a dozen. Exits are what make you money, and this tool teaches you how to manage a trade. It teaches you when to exit a winning position, okay, and just when to get out, okay. Whether to hold on for a bigger run or to get out soon. You know, you never know if the trade you're in, you're gonna lose a point, make a point, or make 10 points. But with this, it tells you what's happening right now. So you're like, oh, cool, it's green. I'm just gonna hold on, right? So there's no need to hold through a painful 3-day retracement against you or worry about getting out too early if a big move, okay? This is a 30-minute chart of Tesla. That's what I was looking at. So we're sitting there and I'm watching this, and it's like, I knew on a daily chart this was the downtrend, and I remember watching this like, man, this thing's gonna die, and all of a sudden some news comes out, okay? So I didn't even get into this trade until point number 3. So this thing had already rallied from like 135 to 150. And I'm like, my God. But I felt comfortable piling into this, okay? Because it's like, man, this thing is continuing to go, go, go. And we just keep going and going and going and going. So it was a pretty fantastic trade, but a tool like this helped give me the confidence to stay in it. So do you like the 39-minute and 78-minute, or did you say 30? Oh, okay, so good question. So I like time frames, and the reason I have a few obscure time frames that I use, okay? So for example, the 39 or the 78 or the 195, okay, is that I like time frames that divide equally 390 minutes, because the cash session equals 390 minutes. So 390 divided by 195 equals 2. Divided by 78 equals 5. Divided by 39 equals 10. So 30 also goes into this evenly. What doesn't is 60. If you have a 60-minute chart, you're looking at 6 1-hour bars and then 1 half-hour bar. And to me, that drives me nuts. I like to see things that are exact. So instead of a 60-minute chart, I use a 78-minute chart. The 30 and 39 are kind of interchangeable. I kind of like the 39 a little better because not a lot of people look at it. So I kind of like to look at stuff that the crowd isn't looking at. Okay, so this is a tool that I was using during the open house. A lot of people didn't realize what it was. So if you are a member of Simpler Trading, you can get that tool for 20% off. I'll show you where to get it. And you can get that 20% off through the end of January as part of our member appreciation month, okay? So again, for the month of January, it's member appreciation. So if you're already a member and you're like, oh, I didn't even know you had 10x bars, I'll show you where to get them. You can get 20% off. And if you're not a member, you can still claim, if you're not a member of our room and would like to, you can still go to simplertrading.com/house, become a member, and take advantage of this. So as a reminder for our open house, and by the way, I'll stick around here and answer questions and stuff like that too. But if you go to simplertrading.com/house, what's going to happen is you'll come to this page and just say, oh, okay, if you want to try us for a trial for 30 days, it's $7, okay? And for $7, you get the live trading chat room, you get trade alerts sent directly to your phone when we enter and exit trades, daily premium videos, exclusive member webinars, and trading room archives, plus for the month of January, 20% off all indicators, including the 10x bars, okay? For a monthly subscription, if you're looking at this and saying, oh, that's cool, I'd like to actually just sign up and become a full-on member, it's $197 a month, and with that, of course, you get all of this. Also get a hard copy of my book, Mastering the Trade, which just released, 3rd edition, our Options Foundation course, our Trading Psychology and Money Management Blueprint, Fibonacci for traders, and the Ultimate Guide to Spreads. And then if you're looking at this and saying, this is great, is there any way I can save a little money on it? You can sign up yearly, and basically you pay for 10 months and get 2 free. And you get all that as well, okay? All right, so any questions on that? Any questions on the 10x bars? I am happy to answer them. When will the books be mailed out, or is it an ebook? So it is definitely the actual hardback book. So we are waiting for copies from the publisher, but it is a big 450-page book. Talks a lot about trading psychology, specific setups, all that kind of fun stuff. And if you go to Amazon to order it, it's like $70 or however much it is. Oh yeah, so is there a coupon for the 20% off? You know what, that's a good question. Let's go to the site real quick and look. So if you go to simplertrading.com, and okay, so I'm logged in, and then I come over here to indicators, and then you can see there's the 10x bars right there. And then let's see. So you go in here, and then you basically just say, okay, great, I want the 10x bars for what platform? And then let me double check in terms of, oh, there was a credit, okay. Yeah, so if someone could clarify, I think is it a coupon code? I will double check here real quick, like. Okay, good, thank you. So yeah, so the 20% discount is automatically applied at checkout. Yeah, there we go. So they're normally $397, and then the discount is applied for $318. So yeah, so it's all during the month of January as a member, then it's automatically applied. Yeah, so when the book first came out, there are bonus packages that are just being mailed out. We had a back order of t-shirts, coffee mugs, and all that fun stuff. And there's literally been stuff being shipped out the door today and late last week. So you'll be getting some of that as well. What is the gold subscription? So the gold subscription is this. So we have basically a meeting room, you're in the gold subscription. So that's what that is right there. This room where you can interact with everybody and trade and stuff like that too. And if you're in there already, you're locked and loaded and good to go. Oh, good, Laura. So t-shirt and mug arrived today. All right. All right, awesome, guys. Well, I'll leave this up here, and then of course you can also call us or email us if you have any questions. I will put our email up here real quick as well. So not support at trading.com for any questions as well. And just keep in mind that this open house special, if you would like to become a member, is good for the next 24 hours. And then as a member, you do get to take advantage of that 20%. And then remember, if you do decide to do the $197, you get like $1,000 worth of classes included as well, which is pretty awesome. Yeah, you know, Sharon, And I know, and people will ask this and say, you know, this is an indicator I think we released like 3 years ago. And then, you know, and I believe me, I do get it. And sometimes what'll happen is, you know, we're doing our R&D and we're like, oh my God, look at this. Now we got snap levels. So it's easy to forget some of the kind of tried and true stuff that's already been developed. And the idea, of course, with this stuff is that it can work in conjunction with each other. And it's also meant to fit different market conditions. The nice thing about the 10x bars is it truly is a universal indicator that fits all market conditions. You know, choppy, direction, it's just right there. Oh, sure, Joe G. Yeah, if someone could check if Joe has a membership, that would be awesome. All right. All right, guys. Well, fantastic. I will leave this page up here. Again, we're here for a while, so if you have questions, shoot us an email, give us a call. You know, again, happy to have you guys on as members. It's going to be a great year, a lot of fun stuff going on, and hopefully that helps in terms of the day-to-day markets. All right. Awesome, guys. Have a good one. And then for those in the room, I'll see you tomorrow. And then for those of you in Carolyn's class, that's starting tomorrow as well, which will also be a lot of fun. So we're going to have a power-packed week, and see you on the other side.